JBlog, 7th of November 2010. It was quite a busy week with the election as well as the stimulus package. QE2 is out, 600 billion. And of course we have the market spike right here that followed that. I'm still trying to analyze exactly how this happened. Because one would think that this part was already pricing in the stimulus. Stimulus came in roughly where it was expected to be. In fact, it came in a little bit on the low side. People guessed anywhere between 500 billion and 1.5 trillion. Definitely no shock and awe there at 600 billion. And so that was not surprising. So why this bounce happened right here on Thursday and Friday, I'm still trying to figure out myself. Obviously I was not quite right. I did not expect this. Best explanation I can come up with is short covering. That's of course a possibility that the bears have simply given up, and this is a short covering rally at the end of an already run-up rally. 600 billion isn't really that much, and that's spread out over 8 months. That's actually a tiny amount of money compared to what's out there. It does not justify any rise like this, considering the total size of the market. Now, of course, my analysis on the package itself is it's a waste of money, but then lots of what the government has been doing is a waste of money because it hasn't gotten us anywhere. Big picture, no benefit for the taxpayer themselves. They only get the bill. That is the certainty. The taxpayer gets the bill, and maybe it'll work, maybe it won't work, but for sure the US taxpayer will be on the hook for even more money. This is something I've started to look at since last week, is short-term futures on the VIX. And I've started to buy some options against this simply because I believe that there will be some volatility in the future, and I believe that these options are currently underpriced, so I'm holding that as a hedge against some possible market volatility coming up. But I look at this here, and this is an amazing bottom washout. Let's take a look at that in a different, just the VIX by itself. We had a bit of a spike there on Wednesday, and then of course it fell down again. This market is discounting all possible risk. Nothing can go wrong according to this market. And of course, when we reached this low here in the middle of April, it spiked up very high from there. So I believe the options on the VIX currently have a very significant risk-reward ratio, and that's definitely what I'm after. I can see a 10-to-1 here. If anything like this happens again, this will be beyond a 10-to-1, so a 10-to-1 is hard to ignore. Oil oil is almost at 90, has gone to a new high. Again, this market has priced in absolutely all good news there could possibly be, and anything that goes wrong along the way of this rose-colored glass view that Wall Street seems to have could cause a serious decline like this. Natural gas is going up a little bit. I started trading into natural gas a little while ago. I looked at this washout at the bottom here and I said it's getting too cheap. Winter's coming. Low time for natural gas is in the fall. February, I believe, is the high part. So I just bought some natural gas, and I'll be sitting it throughout winter. And from what I hear, it could be a very cold winter. We'll see about that. Gasoline has gone up in price. This will take money out of the pockets of consumers. Consumers are not doing that well to start out with, so higher gas prices certainly aren't helping. Gold is on everybody's top of everybody's list. Um, I've taken some options against a possible decline in gold, simply because once again I think it is amazingly overpriced at this point. Not that there's anything wrong with gold. I love gold, but too far, too fast is what I think. This is the long-term trend right here. After that long-term trend, it should be somewhere around 1240 or so, and it being at 1400, it's just way too much. Silver even more outrageous, almost at 27 now. There could actually be a justification to that, simply because there is a conspiracy theory out there that a couple of banks have been depressing silver prices for way too long, and they're basically running out of silver. This might be a short covering rally of people who have been shorting silver for a very long time, because the silver gold ratio that we can look at right here is hit highs of 72, and the way they come out of the ground is 16 to 1. So silver gold is definitely not in relation, especially because silver gets used up, gold does not. But of course, this is the bad boy that causes it all. The US dollar has been dropping like crazy, because when governments print money, then what money is out there obviously becomes worth less. Now, the rest of the governments in the world are not happy about this at all. This is basically the starting of a currency war. We'll see how the European Union, China, Japan will react to that, because it's all very nice that the United States wants to make its exports more competitive with the world, but of course the rest of the world wants that too. And at some point or other, that doesn't work if everybody wants to make their currency really cheap. Copper has gone through the roof here. Again, surprising. Um, but again, I believe there was lots of shorts out there in the September-October time frame, because that's supposedly the bad part of year, and perhaps there's lots of bears that are now covering their shorts, and maybe that's what we're seeing. Gold itself in euros as compared to the US dollar, so that takes out that part about what the US dollar dropping constitutes, is along the same trend line, so nothing here has changed. Um, so this is just slightly above where it should be. Gold is much more fairly priced in euros than it is in US dollars, which is why I'm personally buying the US dollar and I'm selling short a lot of other things, because I believe that mean reversion does work. Now the market itself, where are we? The market itself has of course had this big bounce. This is the New York Composite, and it has exceeded the highs that were set. Back here is the weekly chart, back in April, before the drop. It has either exceeded or it's very close to it, so that's definitely gone a lot higher than I expected it to. This has been a very interesting run. One stock that is actually a little bit absent in this is Apple. Apple has not made any new highs, and if you look at the RSI has not made newer highs, even though the stock has gone further up. So there's a decline here. This run is definitely weakening. That's interesting. On the core sector side, well, the thing that still surprises me, I mean, it all surprises me. I must say I did not expect any of this to happen. But, we have the materials going through the roof. We have energy going through the roof. That's not surprising at increasing oil prices and gas prices. Financials popping out. Everybody figures there'll be less regulation with the Republicans in charge. So that should be good for banks. just what we needed. Industrials popping up high. Technology already had a lot priced in. Consumer staples is going up nice and even, but the one that is surprising is again the consumer discretionaries, because nothing has fixed the issue with the consumer. Again, I've got some put options on the consumer discretionaries because I have difficulties believing this. I am at this point doing a bit of faith-based investing. We'll see where that goes. News stories. Love this one. Greek people are sending bombs to leaders around Europe because they are not very happy about having their lives virtually changed overnight. Should be no surprise that such actions take place, says this Greek person here, who's a teacher nonetheless. So it's okay to send bombs because, hey, they can no longer retire at 52. Well, that's really breaking my heart. I mean, talk about biting the hand that feeds you. This was another surprise. 150,000 jobs added in October, exceeding forecasts. Now you have to keep in mind that most of those jobs were in the service industry. Actually, manufacturing lost jobs. So this is still not a good number, and the unemployment rate has not changed at all. So once again, questionable whether this is actually as good as it sounds. This is basically the same story. AIG lost a bunch of money due to write-downs. That is not surprising neither. Here's once again the hope thing about declining the slope of hope. So once again, the market is still hoping to find good news about something. There, of course, many people who do not believe that the stimulus package will actually work any better than the last one did. So there are articles about people that don't agree with any of this stuff that is being done. Consumer spending rises less than forecast. Incomes unexpectedly drop. Well, it doesn't look like that from the consumer discretionary index, but those are the facts. So once again, the market is pricing in everything to be wonderful, and everything is not wonderful. Eventually, one of those two things will have to change. Either everything becomes wonderful, I have my doubts about that, or the market will finally figure out that it was entirely too optimistic and will drop again. And that would be my expectation, that that's what would happen. Goldman Sachs not making as much money as they used to. That's not surprising neither. I guess those guys aren't really as smart as we give them credit for. They're not the gods they're made out to be. MasterCard is making money because lots of consumers are paying with credit cards. Again, not a wonderful thing. I don't know what they're spending it on, but the possibility there, of course, that people are once again going into debt. Not a good thing. Hedge funds that are shutting down. So there's lots of things going on that just don't really look that good. Bernanke may ignore risk of inflation. Yeah, just a little bit, 600 billion worth. And commodities jump to a 2-year high. So everyone is happy. Everyone figures, well, there's money on the table. It's wonderful. We'll see where that all goes. I continue being bearish, but I'm obviously at this point very wrong on that view, and I'm thinking I will not be wrong forever. But for the time being, I'm just sitting by, shaking my head, and wondering perhaps I'm the one who's insane. But we'll see. History will judge. Anyways, that's all I have for today. All the best and happy trading.